Hey everyone, welcome back to Corporate Dakota, the place where we sift through the corporate jargon so you don't have to. Today we're diving into the Palmer Square Opportunistic Income Fund semi-annual report. Get ready for some twists and turns because it's less income and more opportunity to understand complex financial instruments. Let's jump right into what this report covers. It's basically a snapshot of the fund's performance for the 6 months ending January 31, 2025. We're talking about where their money is invested, how much they made or lost, and all the fine print. Alright, time to see where the money's parked. This schedule is a detailed list of all the investments the fund holds. They break it down into categories like bank loans and bonds. We'll come back to this because there is a lot of money there. First up, bank loans. These are loans the fund has made to various companies like AIP Bayer and Accession LLC. The interest rates on these loans are variable, meaning they change based on a benchmark rate, and the fund has about $72.6 million tied up in these loans. Next, let's look at bonds, specifically asset-backed securities. These are bonds that are backed by a pool of assets, often loans. They hold a ton of these, like securities from 522 Funding CLO Limited, and AGLC as the payment depends on those underlying assets. They have a whopping 327 balancing 6 million orders in this category. Then we get to the commercial mortgage-backed securities, or CMBS. These are similar to the asset-backed securities, but specifically backed by commercial mortgages like those from DBU Mortgage Trust. They hold about $32 million in this category. Let's move on to corporate bonds. These are bonds issued by companies like Celanese and H.B. Fuller. Corporate bonds are generally seen as a bit riskier than government bonds because companies can go bankrupt but are still very stable. They have about $38.7 million invested here. Now, exchange-traded funds, or ETFs, these are like baskets of stocks or bonds. The fund holds ETFs from Palmer Square itself, their own company, totaling around $609,000. Also notice that almost $37 million is parked in a Fidelity money market fund. This is where the fund borrows a security and sells it, hoping the price will drop so they can buy it back cheaper and pocket the difference. Risky business. They have about $1 million in short positions. Let's move on to swap contracts. These are agreements where two parties exchange cash flows based on some underlying asset or index. Here we see credit default swaps, which are basically insurance on debt. The fund has a credit default swap with JP Morgan betting against Renault with a notional amount of $425 million. Then we have forward foreign currency exchange contracts. These are agreements to buy or sell currencies at a future date at a set price. The fund is selling euros and buying US dollars with a total value of over $20 million. Now let's take a look at the consolidated statement of assets and liabilities. This is a balance sheet showing what the fund owns and owes. Investments are valued at $479 and other. That is after they've borrowed $41.7 million to juice up those returns. This puts their total net assets, what's left over after subtracting liabilities, at $434.3 million. Okay, time for the consolidated statement of operations, which tells us how the fund performed over the 6 months. The fund generated $21.9 million in investment income. After expenses, including advisory fees to Palmer Square, shareholder servicing fees, and interest on borrowings, which are very substantial at 1.3 M, the net investment income is $6 million. The fund had a net realized loss of around $407,000 and unrealized loss of about $1 M. This is a big number in investment companies as it reflects the money it has on paper due to instruments it is holding increasing or decreasing in value, but it hasn't sold yet. Adding it all up, the fund had a net increase in net assets from operations of $17 million for the 6 months. Now, let's look at the consolidated statements of changes in net assets. This shows how the fund's net assets have changed over time. But they paid out $18.6 million in distributions to shareholders. They also sold new shares, bringing in $71.23 million and repurchased some shares, costing $22.5 million. This all nets out to an overall increase in net assets of $50.4 million. Capital share transactions brought in $52 million. The fund went from $383.18 million to $434.3 million in net assets. Finally, the consolidated financial highlights give us some key per share metrics. The net asset value, or MF, started at $18.50, ended at $18 per share. The total return was 4.28% for the 6 months not annualized. The expense ratio, which tells you how much it costs to run the fund, is 2.10%. Ouch. They are also borrowing substantially with almost $42 M in senior debt. These are loans that have priority in the event of bankruptcy. Digging into the board's decision to renew the investment advisory agreements, we see they looked at performance, fees, and profitability. The board concluded that the compensation to the investment advisor was fair and reasonable in light of services they provide, but also considered the asset level of the fund and the fund's high expense ratio of over 2%. The expense example lays out the costs in a way that's easy to understand, showing what you pay on a $1,000 investment. Actual expenses were $10.82 for the 6-month period. So now my take on all this after looking at the raw numbers. The Palmer Square Opportunistic Income Fund presents a mixed bag. They seek high income with pretty good historical returns, but they are quite expensive and they borrow substantially to increase returns. They invest in complex instruments like CLOs, which can be risky. These are potentially dangerous investments. It's like the Wild West in some of those instruments. The high expense ratio is also a big concern, eating into investor returns. For experienced investors who understand complex debt instruments, but it's not for the faint of heart, especially given the risks and high fees. Thanks for watching this breakdown of the Palmer Square Opportunistic Income Fund. If you found this helpful, please like, subscribe, and hit that notification bell so you never miss another episode of Corporate Decoder. And let me know in the comments what companies or reports you'd like me to decode next.